And welcome. It's Mary Ellen McGonagle here with your Friday afternoon MEM Edge show. The show where we put you in front of where the action is in the broader markets. And we certainly had a bit of a flat week last week, but as always, a lot percolating beneath the surface. Some of those news items that drove price action last week, we did have the Federal Reserve release notes from their latest meeting. And in the notes, they cited that they may and are anticipating 2 rate cuts toward the end of the year, and this is being anticipated prior to those notes. So no real response there. Other news that drove price action last week, analyst upgrades and downgrades. We are heading into earnings full force next week. Many major banks are due to report. Airlines, we will take a look at those areas as we move into the beginning of Q2 earnings season. As always, a very, very impactful period for the broader markets. Trump also news there relative to the tariffs, and tariff fears did increase as the week progressed. A 35% potential tariff for Canada on imports to the US, and then also movement in the metals stocks due to tariff fears as well. So that's what I'm mentioning as far as beneath the surface. Also, the conflict between Russia and Ukraine has picked up, certainly into the end of this week, and we did see movement in select areas relative to that. I will get into that as well. Next week, we get key inflation data with core CPI and core PPI data. And let's go ahead and take a look at these markets and see where did we close for the week. And here we are, a daily price chart of the S&P 500. As mentioned, we ended the week relatively flat, but the uptrend still remains in place. We did hit another new high on Thursday and then nominally pull back today, but we are above this key 10-day simple moving average with a positive RSI and a positive MACD. From here, as usual, let's go ahead and take a look beneath the surface at these 11 sectors that are a part of the S&P 500, and it's a 2-month daily price chart view sorted by this relative strength indicator. In fact, let me just go ahead and make sure that we are sorted properly. And here we are. You can see in an unusual play, the S&P 500 is sitting up here at the forefront, rather evident of the fact that the markets overall were generally flat. However, industrials are up here at the forefront and certainly well founded. There is a lot going on with heavy construction type names as AI continues to pick up steam relative to data centers being built and the need for certain metals. And hence, some of these heavy construction names are on the move higher. We can also see technology up here at the forefront. The group was down for the week. However, it was still pockets of strength taking shape there, which we will get into. And then we'll also talk about some of those economically sensitive areas of the market that did deteriorate a bit going into the close of the week, all about those tariff fears and inflation fears reigniting, certainly not to the level that they have in the past, but definitely evident. XLB, I mentioned materials on the move. We can take a look going forward at silver, gold also on the move. And again, primarily tariff related. And then also that safe haven concept with those gold stocks going into potential fears relative to action with the trade wars possibility. XLE up here at the forefront relative to these other sectors, and it was the top performing group this week, up almost 2.5%, all about an increase in the price of oil, some of that having to do with Russia and Ukraine as far as conflict there. But there were other factors that also drove XLE higher. Primarily earlier in the week, we did see alternative energy stocks pop a lot of that having to do with tax credits in the big tax bill that will benefit many of these names. XLY, consumer discretionary, sitting up here at the forefront. The overall group was flat, but as we move through, we'll get into areas of strength there as well. And then, as always, you want to be aware of areas that are exhibiting relative weakness. First up is financials. I talked about those big banks that got hit. Other areas as well, as you know, financials, particularly banks, are very economically sensitive, and any hint of potential inflation will push that group down. Also, communication services. This is XLC. A number of the names in here are going to be internet related. However, there is another big area in the communication services, and that is telecom stocks. I'll just give you an example of one name that sold off quite a bit. TMUS and others also now down below their 50-day simple moving averages with negative momentum indicators. As we go through these sectors, you also want to be aware of the fact that consumer staples continue to struggle, despite the fact that we did see Post trade quite a bit higher on news of an acquisition there. But outside of that, we are seeing continued deterioration in the staples, and it's not entirely unexpected because we are continuing to see strength in those other areas. Also, as we move through healthcare, sitting here, XLV trending mostly sideways. We had a good start to the week in biotechs. We'll take a look at that area, but net, it is sitting in a generally bullish position, but not relative to other areas exhibiting strength. So from here, we are going to drill down further, take a look at these ETFs. These are industry groups that go beyond those broader ETFs. And again, as always, it's about uncovering where is that outperformance taking place. From there, I advise you to drill down and uncover why. But more importantly, you do want to participate in that strength in the broader markets. And again, this move is not whippy. It's not something that you can look at on 1 week and make a long-term prognosis. It is going to be more of a general move. For instance, semiconductors are up here at the forefront, and the group was up 1%, so certainly bullish. And you can see this sharp advance that we have seen in semiconductor stocks. This is also an economically sensitive area of the markets. From here, let's go ahead and drill out a little bit further and take a look at a longer term view. This is a monthly view of semiconductors. And the reason I like to do this is because it gives you a little bit of a view, because we have seen on that daily price chart the sharp advance. But if we go back historically, when semiconductors really get going, the advance can last. And this, of course, is all about demand monetization for AI products. So as we move through earnings, it's going to be critical that that demand for these high-grade semiconductor chips remains in place. On the monthly, we're poised to get that black line up through the red and confirm a long-term uptrend. Some other areas up here, I talked about bank stocks being highly sensitive to any economic weakness or strength. And you can see we are just sitting up here. Next week, I talked about some of these names that have earnings. So here we are with JP Morgan. Again, there are any number of other large money center banks that are due to report their earnings. So let's take a look. We had this run up going into this week and then a pullback. And some of this run up had to do with the stable coin news, as far as these companies that are involved in crypto being able to take advantage of that, reduced regulation in these banks, and so on. This pullback that took shape earlier this week was all about analysts lowering their, not so much their guidance. There's still a bullish outlook for these bank stocks overall. However, it was everything to do with valuation, this fact that the stock had gotten up to that 296 level, and we were in a very overbought position. And then, of course, too, if you look at the stock price relative to its earnings, there are those that felt the stock was rich. So hence that pullback. Moving through, I did want to also share, this is a group I shared with you last week, XHB, the home builders. We're continuing to see an uptick in these home building stocks. Nice high volume on your rally days. And I did add another name to my MEM Edge report that is well positioned to take advantage of this new uptrend taking place in these home building stocks. We can also take a look at IWN, small caps, another area I mentioned last week is having just entered into a nice uptrend. That uptrend in those small caps remains in place. And then also we can see retail. Retail was a bit mixed this week. We do have companies due to report earnings, but relatively when looking at this chart, this is last week's sharp advance, heavy volume, and a very orderly period of consolidation. So no true concerns around that. There was one area that I wanted to highlight. I mentioned IBB, the biotech group, and then the fact that we did cross back above this 200-day simple moving average, but today we did pull back, and a lot of that having to do with today, Friday, just a general risk off sentiment permeating in the markets again with those trade fears. So as we move through, another area of note that pulled back rather sharply, and we'll take a look at a couple of names that were impacted. This is IGV, and it is the software ETF. So if you own software names, I'm sure you felt a bit of pain this week as the group deteriorated going into today's close. We can also see pretty high volume on yesterday's sell-off, and we'll get into some of that area as well. And then on the downside, good news, volatility continuing to remain subdued. We're down here at about that 16 level. So the fear may have lifted a little bit today, but certainly not enough to get that volatility index into above 16. Gold, I talked about that being a bit of a safe play, but also a move into these metals overall. Here we are with silver SLV, super high volume, and you can see this excellent base breakout on that heavy volume in silver stocks. So as we move through here, let's go ahead and take a look. I talked about the fact that analyst upgrades and downgrades, as you get closer to earnings season, you will see those upgrades and downgrades have more of an impact. This is as we move closer. This is Wall Street analysts that are meeting with management. And when you see upgrades or downgrades, again, right before earnings, oftentimes they do come to pass in a way that was talked about that close to the earnings report. They may have insights relative to the company's numbers and trends on revenues and so forth. So let's take a look at a couple of these names that did get analyst upgrades and downgrades going into earnings. So first up, we're going to take a look at AMD, major semiconductor stock. And you can see we had this nice gap up. This is all about analysts, and these are going to be primary analysts that are experts in this particular space, semiconductors and AI. But they did raise their estimates. The company is due to report their earnings in about 3.5 weeks. So we do still have quite a bit of time before that release, but quite bullish in response. Another name that also did get an upgrade, we can take a look at TREX. And we did also experience a gap up on the analyst upgrade. However, we are still below that 200-day simple moving average. So we may have, certainly we do have more work ahead. We do have a positive RSI and MACD, but it's setting up quite nicely. TREX is due to report in about 4 weeks. So these are good names for your watch list when you see that sharp advance relative to that upgrade. Oftentimes you will see further upside. ROKU, also a company that did get an upgrade. They are due to report in 3 weeks. The stock very much in a confirmed uptrend prior to that upgrade, but it is the kind of thing that you will want to keep an eye on And there are any number of services that will provide you with that upgrade and downgrade information on a regular basis. From here, I did want to share with you some names that are now just moving above key moving averages. Now, these definitely would be viewed as laggard names. However, they are in the throes of potentially entering into a bullish phase. First up is Domino's Pizza, DPZ. We did have that nice close back above that 50-day simple moving average. Now, this is indicative of what we did see throughout the market was a little bit of a pullback, but we did close the day just at that 50-day and above. You can see that MACD poised to turn positive. So from here, when you see that type of price action, you will want to then dig in and see what could be that driver going into that move back above resistance. Another name, Cooper. This is a medical stock. Now, I'm not too wed to this name because we did have this gap down on heavy volume implying negative potential fundamental news, and we are still in the throes of recovering from that gap. But we did have that move back above that 50-day with a positive RSI and MACD. Another name we can take a look at here is CGNX, CGNX, and another name back up above this 200-day simple moving average. And when you're looking at these names that are in throes of a potential downtrend reversal, what you will want to see take shape is here we are with that 50-day trending downward. You can see the stock finding upside resistance at these moving averages as it continues to descend lower. And then as we begin to mark a potential uptrend, you want to get in particular this 50-day simple moving average. That's going to be your longer term. You want that trending upward so that now these moving averages act as support instead of resistance. So we are back above, and then also you want that move above resistance to take place on volume, which it did again from here. Take a look at those numbers, the industry group, make sure that there are other factors besides the chart or in addition to the chart that are going to, in fact, help it trend higher. Host hotels, HST, you can see that move back above that 200. We talked about getting that moving average trending upward. We had a nice black line up through the red with that MACD. From here, quite simply, you can take a look at other stocks that are in the group. This is Hyatt, any number of names that are also trending higher, a lot doing with having to do with travel and other areas that are again gaining, and you want to make sure you have that group strength behind you as well. Let's take a look at one last name that is back above. Actually, I do have a couple more names, but this is Lennox, LII. They have a lot by way of air conditioning and heating type products, but very much in that construction space. Certainly when you see housing stocks on the move, you would look for this type of name to advance as well. Here we are with the move back above that 200-day simple moving average. And the stock had a nice move on Thursday, but did not give up a lot of that move, which generally is quite bullish. Couple other names here that are reversing, and the reason I'm highlighting these is because we've seen that advance in those leadership names. We all know, in fact, Palantir was up another 6%, I believe, last week. So if you are on the lookout for expanding your portfolio or moving money to newer areas, this is CMI Cummings, a heavy truck equipment provider, back up above that 200-day simple moving average, generally higher trending MACD, sitting up there looking interesting. And then also NCLH in line with the move into those leisure related stocks. And this is Norwegian Cruise Line, back above that 200-day, nice heavy volume, and really did not give up certainly all of that advance on Thursday. From here, you will want to look at competing names, and this clearly is your leadership name in that cruise space, but certainly encouraging to see Norwegian picking up in its potential advance. And then also, this is an area that I mentioned probably about 3 weeks ago because it is an area where legislation came through, numbers are coming through as it relates to the growth prospects for these gaming stocks. So we can take a look today because you may see this and experience it where you have that move back above that 200-day simple moving average. And then today it gave that up and then some. It was down 7.5%. So a couple of things at play here is the fact that that big tax bill that was passed did change the outlook for some of these companies because the tax implications where in the past you've been able to write off 100% of any losses. So if you were to gain 100,000, lose 100, you would net out. However, that's been changed so that it's only 90% of your losses can be written off. So in light of that news, there was a well-known professional gambler that came out today and claimed that it will definitely negatively impact the overall group. Now, I will tell you that today analysts are revising, and this is Wall Street. So you have Wall Street not against, but certainly it's just a case of who do you have further or more faith in. So if we look at like names such as Penn National, we can then go down to an intraday, and this is that gap down on that news as far as a possible negative impact for tax reasons, and a 15-minute price chart, so pretty heavily to the downside. The reason I'm highlighting this is you want to be able to have some sort of precedence as your guide when the stock does, and something like Penn National is going to be a little bit more in the news. And here we are coming out of a downtrend. And here is what you want to be on the lookout for to tell you that buyers are potentially coming in. It's going to be a close back above that 5 and 13 MAV, get that RSI in positive territory, and likewise for that MACD. But just note that you are in a generally volatile stock. This 15-minute chart is for super near-term traders, but it can be really quite helpful. Other names that we can take a look at here that did have moves, one last name in that leisure and consumer discretionary area, not overly compelling. This is Malibu Boats, MBUU, and you can see we did have that tip right up above that 200, did not get follow through, and we're not seeing a whole lot of volume, but it is the type of thing that you can screen for quite easily, and then from there take a look at these names and see what may or may not be going on. I'm going to take us to the initial interface page at Stockcharts, and many of you may be familiar already, but if you are not, let's go through this exercise. This is a market overview, and it is active throughout the day as far as keeping you updated. And you can see we closed today with the Dow down a little more than 0.5%, NASDAQ down 0.25%, and so on. And then volatility did tip up just a bit today on the trade tariff news. But then as you move through, you can get a very quick look at some of these other areas. So here we are with the yield on that 10 and 30 year, and it did increase. This is all about those inflation fears coming back into play. So of note, next week we will get those key inflation data numbers. So also we can then move through, take a look at commodities. I talked about silver on the move higher. And again, very, very quickly, you can assess these various impactful areas of the market. But what I did want to highlight at this time is the fact that crypto, Bitcoin in particular, hit a new high in price. So once you click on to any given area of the markets, from here you can go ahead and pull up that chart. So here we are with Bitcoin when we got up above that 112. That was very significant, and then buyers came in beyond that. You can see that this RSI and the MACD in particular just entering into an uptrend from a relatively low area, super volume on the buying. So from here, I did want to share a couple of ETFs that are in this space for those that might be interested in participating. At this time, we are a bit overbought, certainly with this week's rally, but this is BTC, Grayscale Bitcoin, and it is also exhibiting this base breakout. Nice gap up today. Another area is Ethereum, and so ETFs abound in that area as well. In fact, there was a headline today that BlackRock saw the largest record high inflows into their crypto-related ETFs. And I know there are many of you that would think that is the time to exit. But from my work, when that momentum picks up and you can marry it with a chart. So this is ETHA. And then last up here, and there are any number, but this is another name. This is also Ethereum. It's Fidelity. For me, I would tend to gravitate more toward the BlackRocks and the Fidelities and get into those more liquid ETFs, although you can see the volume is not terrific on here, but certainly it will be more widespread or widely owned so that it won't be quite as volatile. And one other area I wanted to share with you is taking a look at prior chart patterns that we have reviewed to highlight how, in fact, they can be foretelling. So first up here, we are going to take a look at BDX, and you can see this is Becton Dickinson. It is a medical products stock. And what I wanted to do is take you back. This is when I highlighted the stock going into this particular move and the fact that we had wedged sideways beyond that. And I talked about the concept, and I can annotate this because it's not widely known, but it did occur again last week with a well-known stock. So we have this break in the stock, high volume. We're now below these key moving averages, which are now trending downward, and that is a hemorrhage. And then oftentimes, once you see those big, significant breaks, you will see a period of wedging, and it can go to the upside, to the downside. In this case, this is not quite as orderly, but we definitely have found a trading range here. And about 80% of the time, you will experience another leg down. So it is called a hemorrhage with a wedge, and then there's that drop lower. So in fact, when I was highlighting it, I had suggested that we could be on the lookout for that next drop, and it did in fact take place. Another stock that we did review here in the past had a high type flag formation, and I'd like to revisit these just to, again, always about using history as your guide. And here we are with ThreadUp TDUP, and I will take a minute here and mark up that flag formation so that you can, of course, as always, use history as your guide. So I highlighted this stock mid-May. So we had this big move higher. Let's see if I can get this properly formed here. And then you have a sideways wedging period. That is the flag formation. This is the flag pole. Once the stock advances above this formation, that is a high tight flag breakout when we move back above. So we did experience that. Subsequent to that, the stock did advance as it would, given the bullish predisposition of that formation. And we can see that we did hit a new high in price. Now, as far as indicating that this bullishness had run out, first up, you can see we had that MACD crossover, not a sell signal, just indicating that this sharp advance had shifted, in this case, into a more sideways movement. And then as we started to deteriorate further with that MACD, you can see the RSI also trending downward, and then eventually a close below that 50-day with a negative RSI and a negative MACD. So I did certainly want to go back in time and share that with you. Last up, we'll take a look at a couple of IPOs that had exceptional weeks a couple of weeks ago, but they do appear to be running out of steam, for lack of a better word. First up is CRWV. Some of you may be very familiar with this stock. Here we are with the stock coming public. We had a pullback initially and then a very sharp advance in CRWV. It did hit a high here of 170 before deteriorating, and it was down this week. It was down 9% today. The reason I'm highlighting this, let's take a look at another fairly recent IPO that also this company is all about cryptocurrency and stable coins. And we can see it's not quite as evident here. But again, we had that sharp advance. And then here more recently, it was down about 7% today. The reason I am highlighting that is because when we had those sharp moves higher in these IPOs, there was a lot of excitement, a lot of risk on type of outlook for the stock. And from here, we can go ahead into an intraday, get a little better feel for it, and you'll see once it does fall out of favor, you can see a pretty significant decline. So in other words, that I talked about IBB trading lower today and some of these other generally risk on areas potentially coming into a little bit of selling pressure. And another area that I would urge you to keep your eye on because it is by and large a highly risky area. This is ARK Innovation Fund, and there are any number of ARK funds. And if we do see continued deterioration in this area, again, very much risk on. So at this point in time, not a lot of fear came into the markets today, just a little bit of tepid selling. So no concerns at this point. It's more about putting together a system so you can stay on top of those riskier, the appetite for risk. And that is it for this week. Everyone have a fantastic weekend. I'm going to look for you here again next Friday. And before I leave, I urge you, go ahead and hit that like button if you like what you've seen. Put your questions below. I always welcome questions and look forward to answering them. And then, as always, use that link below to trial my twice weekly MEM Edge report for a very nominal fee. See you next Friday.